for creativity, including freedom of expression and protection of intellectual property rights. The government will also strengthen mainstreaming of arts and culture, infrastructure and support cultural production, and as well as creative economy. We are also cognizant of the brand value of Kenyans participating and excelling in international sports arena as incalculable. To support tourism, sports culture, and even recreation, I have proposed an allocation of 23.7 billion, and this includes an allocation of 16.5 billion for the Sports, Arts, Social Development Fund, Kenya shillings 4.9 billion for the Tourism Fund, and Kenya shillings 2.2 billion for the Tourism Promotion Fund. Let me turn to environment protection, water and natural resources. Mr. Speaker, in order to support environment and water conservation and respond to climate change, I have proposed an allocation of Kenya shillings 10.7 billion for forest resources conservation and management, 1.7 billion for forest research and development, 2.7 billion for environment management and protection, 5.9 billion for the Kenya Financing Locally Led Climate Action Project, 1.6 billion for meteorological services, and Kenya shillings 13.1 billion for wildlife security, conservation, and management. In addition, Mr. Speaker, I have proposed Kenya shillings 1 billion for wildlife research and development, Kenya shillings 1.2 billion for human-wildlife conflict compensation, and Kenya shillings 800 million for wildlife insurance. Mr. Speaker, to expand and access clean and adequate water for domestic and agricultural use, I have proposed an allocation of Kenya shillings 36.6 billion for the water and sewerage infrastructure development, 12.5 billion for water resources management, and Kenya shillings 1.9 billion for water storage and flood control. In addition, I have proposed 17.8 billion for irrigation and land reclamation, Kenya shillings 1.9 billion for water harvesting and storage for irrigation. I now turn to improving governance and sustaining the fight against corruption. To enhance good governance and Mr. Speaker, and scale up fight against corruption, I have proposed Kenya shillings 4.2 billion for the Ethics and Anti-Corruption Commission, 4 billion for the Office of Director of Public Prosecution, 6.9 billion for the State Law Office, 8.7 billion for the Office of the Auditor General. In addition, Mr. Speaker, to enhance the oversight and registration of the role of Parliament, I propose an allocation of Kenya shillings 44.6 billion for Parliament. To enable administration and justice, I propose an allocation of 24.7 billion for the judiciary. This includes 900 million for construction and refurbishment of courts and 800 million for the automation of the judiciary. Allocations to the county governments, Mr. Speaker, I turn to this. The county governments will receive a proposed allocation of 400.1 billion as equitable share in the financial year 2024-2025. It's for the first time that they have arrived to this figure of 400 and surpassed it in the last 12 years of devolution. As equitable share of financial year 2024-2025. And this is equivalent to 25.48% of the actual revenue raised nationally for the financial year 2020-2021, which is in compliance with Article 203, subsection 2 of the Constitution of Kenya. In addition to the equitable share of revenue, a further 44.4 billion has been proposed as additional allocation to county governments. This comprises of 8.76 billion for the national government share of revenue, Kenya shillings 35.66 billion from proceeds of external loans and grants for the external loans and grants. Equalization Fund, Mr. Speaker, we have proposed an allocation of 8 billion for the Equalization Fund, which is 0.5% of the actual revenue raised nationally in 2020-2021 reference year. Measures to enhance county government's own source revenue, Mr. Speaker, the National Treasury is implementing a policy to support the enhancement of own source revenue by county governments as we await the enactment of the National Rating Bill. This bill will enable the county governments to correct more property rates, including contribution contribution in lieu of rates. In addition, Mr. Speaker, a multi-agency committee has been formed to manage the rollout of the proposed integrated county revenue management system in 47 county governments. This system will increase transparency, accountability, and efficiency in revenue collection. Let me turn now to taxation measures, Mr. Speaker. The policy measures to support the budget, the tax policy measures supporting the budget for the financial year 2024-2025 budget are very, very critical. In the course of this year, we embarked on tax policy review through a number of tax studies that will support the development of a progressive tax system. Mr. Speaker, the objective of these reforms is to develop an elaborate tax policy that will raise adequate revenue to finance recurrent as well as development budgets. For this to materialize, we intend to first to develop diverse methods to enlarge the tax base. Second, we want to make sure that we minimize tax expenditures that amount to Kenya shilling 63.1% of it is on VAT refunds alone on zero-rated final consumer goods. Third, we want to create a tax system that is not only predictable to taxpayers, but also yields predictable revenues to government. Fourth, we want to develop a tax system that supports markets, that supports production, consumption, and even investments. Mr. Speaker, thank you. Mr. Speaker, the year 2024-2025 marks the beginning of these reforms through the proposed amendments in various tax laws contained in the Finance Bill 2024. Mr. Speaker, these reforms are part of a wider tax committee pre-budget consultations held in May 2024. The ministers responsible for finance and economic planning in the East African Community region agreed on customs measures that will support and protect industries in the region. Mr. Speaker, the tax measures proposed in the Finance Bill 2024 and the said custom measures are expected to generate an additional Kenya shillings 346.7 billion or 1.9% of GDP to the exchequer for the financial year 2024-2025. Let me start with custom duties. Mr. Speaker, allow me to provide highlights of some of the custom measures agreed during the pre-budget consultation with the East African Community partner states. Mr. Speaker, the ministers agreed on a number of measures for enhancing the competitiveness of locally manufactured products by allowing stays of application for the East African Community Common External Tariff, not to change the rates and where necessary, adopt higher rates of duty to encourage local production in East African Community countries. The ministers also agreed on duty remissions for raw materials and inputs used by local manufacturers to facilitate East African Community domestic production. Mr. Speaker, in order to meet local demands and enhance food security in Kenya on key staple foods, Kenya was granted an extension of the current stay of application to import rice at a duty rate of ton, whichever is higher, for 1 year, instead of East African Community Common External Tariff rate of 75%. Also, Kenya was allowed to import wheat at a duty rate of 10% instead of 35% for 1 year under the EAC, East African Community Duty Remission Scheme. Mr. Speaker, Kenya has a strong assembly of electronics industry, including mobile phones. In order to further open up the ICT sector to more investors, Kenya requested for duty remission on inputs for manufacture and assembly of smart telecommunication devices, including mobile phones, laptops, and tablets. This request was granted. Mr. Speaker, the local assembly of automotives continues to facilitate job creation with positive ripple effects in other supportive sectors, especially in the manufacturing of spare parts. In this regard, Kenya continued to develop capacity in the assembly of prime movers road tractors, trailers to meet both local and regional demand. In order to safeguard this capacity, Kenya was granted a stay of application of East African Common External Tariff rate of 10% to apply a duty rate of 25% for prime movers and 35% for trailers for 1 year. Further, in order to continue supporting the assembly of motorcycles in the region, East African community ministers in this regard agreed to extend the duty remission on importation of raw materials for the manufacture of parts used in the assembly of motorcycles.
Friends, allow us to sort of flip the program because of time. I wish that Barbara, if you could come up with Mom, and I would want us to just listen to you. You knew Jambi very intimately, and we want to start the time of the tribute. But Barbara, you could come, you read the Bible for us, and then you'll share your tribute. Then I'll invite Naserian, if you also could come and accompany her. Naserian, just come close and as Barbara shares her tribute, yes, so that we stand together. So she's reading to us, Barbara is reading to us John chapter 17. And Naserian, you'll stand alongside her as we listen to God's word. Then Barbara, also feel free after you read, share your tribute, and then yes.
Hi everyone, thank you for being here. So John 17 verse 1 to 5.
Mr. Speaker, in order to reduce production cost of animal feeds, Kenya was around to extend importation of inputs for manufacturers of animal feeds duty-free under the East African Community Duty Remission Scheme. Mr. Speaker, leather and leather products is one of the value chains under BETA. Kenya has sufficient supply of hides and skins to meet the demand from local manufacturers of leather and leather products. In order to promote this industry and enhance incomes of our pastoral farmers, the ministers agreed to retain a stay of application of duty import on imported leather bags at 35% for Kenya. Mr. Speaker, I have just highlighted a few of the customs measures agreed by East African Community Ministers of Finance. The complete list will be gazetted by the East African Community Secretariat and will become effective starting 1st July 2024. Let me now turn to the finance bill, Mr. Speaker. Mr. Speaker, allow me to highlight tax policy measures proposed in the Finance Bill 2024. I will begin with the proposed amendments to the Income Tax Act, followed by Value Added Tax, Excise Duty Act, Tax Procedures Act, and miscellaneous fees and levies. Mr. Speaker, let me start with amendments to the Income Tax Act. Currently, retirement benefits, Mr. Speaker, are subjected to tax. This taxation ceases at the age of 65 years. In order to support the retired employees, I propose to amend the Income Tax Act to exempt all retirement benefits paid from the Registered Pension Fund, Registered Provident Fund, Registered Individual Retirement Fund, and National Social Security Fund and the Public Pension Scheme upon attainment of the retirement age. Mr. Speaker, for the individuals who take up early retirement, this exemption will only apply if the individual has contributed to the pension scheme for a period of 20 years from the date of registration as a member. Mr. Speaker, in addition, the annual limit of pension contribution that is exempt from tax is 30% of the individual income, or Kenya shillings 240,000, whichever is lower. Considering that this limit has not been revised since 2005, and to encourage savings for social security after retirement, I propose to increase this limit to 360,000 shillings per annum. Further, Mr. Speaker, I propose to allow deduction contribution to a post-retirement medical fund subject to a limit of Kenya shillings 10,000 per month. This will promote savings for post-retirement healthcare needs. Mr. Speaker, currently the threshold above which withholding tax applies on payments for management fees, professional fees, training fees, and contractual fees is Kenya shillings 24,000 per month. I propose to amend the Income Tax Act to remove this threshold since it creates a room for tax planning and is a challenge to tax administration. Mr. Speaker, despite the Income Tax Act providing a corporate tax rate of 30%, some taxpayers pay tax at an effective rate of less than 15%. This is due to vigorous tax planning and tax incentives provided under the Act. To prevent this practice, I propose to amend Income Tax Act to introduce a minimum top-up tax payable by a multinational group with a consolidated annual turnover of euro 750 million, whose effective corporate tax rate is below 15%. Mr. Speaker, the spectrum of license fees paid by telecommunication operators are currently not tax deductible, creating unfairness in the tax system. In this regard, I propose to amend the Income Tax Act to allow telecommunications network operators to deduct the spectrum licenses fees over a period of 10 years. Mr. Speaker, advanced pricing agreements have emerged as a valuable tool for preventing tax disputes related to transfer pricing of cross-border transactions. In this regard, I propose to empower the Commissioner to enter into advanced pricing agreement with taxpayers engaged in transactions with related entities. Mr. Speaker, to attract international financial investors in Kenya and reinforce Kenya's position as a regional financial hub, I propose to reduce the rate of capital gains tax from 15% to 5% for firms certified by the Nairobi International Financial Center of Origin. Mr. Speaker, a transfer of property between an individual and an entity where the individual holds 100% shareholding does not constitute a gain. In this respect, I propose to exclude from capital gains tax this kind of transfer. Mr. Speaker, the digital services tax was introduced to prevent tax-based erosion occasioned by migration of traditional businesses from physical shops to online platform that is not feasible by the Commissioner of Tax for tax purposes. It has been noted that the design of the tax does not capture all taxpayers, leading not only to loss of revenue but also to unfairness in taxation. For this reason, and in line with international best practice, I propose to amend the Income Tax Act to replace the digital service tax with the significant economic presence tax. Mr. Speaker, to expand the tax base and make our country self-reliant, I propose to introduce an annual motor vehicle tax at the rate of 2.5%, the value of the vehicle, subject to minimum amount of Kenya shillings 5,000. Mr. Speaker, let me now turn to gains. There are substantial gains for Kenyans. Mr. Speaker, currently the tax-free amount on subsistence allowance paid to employees in the private sector for a period spent outside the usual place of work while on official duties is capped at Kenya shillings 2,000 per day. This is quite low considering the inflation that has occurred over the years. To cushion employees in the private sector from high cost of living, I propose to review the threshold to an amount not exceeding 5% of the employee's monthly gross earnings. Second, Mr. Speaker, the affordable housing levy and pay as you earn are calculated from the same base, leading to double taxation. To address this, I propose to make the housing levy deductible expense. This means that there is a tax savings for Kenyans and therefore affording Kenyans more money in the pocket. Mr. Speaker, in order to encourage Kenyans to continue constructing their own houses, I propose to increase the limit of interest payments that qualify for mortgage relief from Kenya shillings 300,000 to Kenya shillings 360,000 per annum. Let me turn now, Mr. Speaker, to amendments to the value-added tax. Mr. Speaker, I will now highlight the amendments of the value-added tax. Mr. Speaker, currently the registration of VAT is a requirement for a person who makes taxable supplies of Kenya shillings 5 million or more. This threshold was last reviewed in 2007. In recognition to the effect of inflation over the years and to enhance efficiency in tax administration, I propose to increase the threshold to Kenya shillings 8 million. Mr. Speaker, the VAT Act allows taxpayers making both taxable and exempt supplies to claim input tax where the proportion of exempt supplies is less than 10%. This has led to tax planning and hence loss of government revenue. To address this, I have proposed the removal of the threshold so that only the input tax relating to taxable supplies are deductible. Mr. Speaker, in support of the government's effort to combat malaria, I propose to remove VAT on mosquito repellents and raw materials used in the manufacture of repellents. This will encourage local production of the repellents. Mr. Speaker, tax expenditure was estimated at 393.6 billion, or about 2.9% of GDP for the year 2022. Of this amount, VAT tax expenditure amounted to 248.3 billion, or what is 63.1% of the total estimate of tax expenditure, which is a large erosion of the VAT tax base. Mr. Speaker, tax expenditure creates avenues for revenue leakage and thus denying government the revenue to support key priorities that benefit majority of Kenyans, of the citizens in Kenya. Recognizing the importance of tax expenditure in the promotion of investment and addressing welfare challenges in the economy, and in line with the medium-term revenue strategy, I propose to rationalize the VAT tax expenditure as provided for in the VAT Act in form of exemptions and zero rating based on the following criteria. First, that goods currently exempt be subjected to VAT. Second, zero-rated finished goods and consumer goods and services be exempt from VAT. Third, zero rating be restricted to goods and taxable services meant for export. Based on the above, Mr. Speaker, based on the above criteria, Mr. Speaker, I have proposed several amendments to the first schedule of the VAT Act in order to move some goods and services from exempt to VAT-able status. In addition, I have also proposed amendments to the second schedule of the VAT Act so that we can move some of the goods and services from zero rating to either exempt status or VAT-able. This rationalization is expected to expand the VAT tax base and create fairness in taxation. Let me turn now to amendments in the Excise Duty Act. Mr. Speaker, the tax measures I have proposed under excise duty, I propose to change as follows. I propose to change the due date of payment of excise duty on alcoholic beverages from 24 hours within 5 working days after removal from the stockroom. The 24 hours time frame has posed administrative challenges and cash flow, as well as cash flow challenges to the taxpayers. Mr. Speaker, to protect local assemblies and create fairness and equity in taxation, I propose an introduction of excise duty on imported fully built motorcycle at the rate of 10% of the customs value, in addition to specific tax duty rate of Kenya shillings 12,952.83 cents per unit, whichever is higher. Mr. Speaker, participation in betting, gaming, prize competition, lotteries continues to affect